What can we expect to happen with Tesla's business and stock the next 6 months here in 2025? First, we have Tom Lee of Fundstrat, who's predicting the S&P 500 to reach all-time highs this month. Very bullish. Second, video Giga Texas is showing preparation for an increase in vehicle production. Longer work hours has been requested, and more spy shots of what could be the more affordable vehicle are being spotted. Third, we're starting to hear more about the supply chain partners Tesla is securing. This time for Optimus. It seems they selected Samsung Electromechanics to supply the camera modules for the bot. These partnerships are a good sign for long-term volume, but what does it mean for the short term? Today, we'll discuss all the things we might expect from Tesla over the final months of this year. Joe Bakti is an economist and tech entrepreneur. He has a YouTube channel covering both Tesla and AGI. Check out his website and community at pioneerlands.net. Welcome, Joe.
Good to be here.
End of 2025. Here we are, last 6 months. I want to hear your thoughts of all the things that you're expecting to happen, both the business and the stock. But let's start off with, of course, the economy. What's going to happen? Are we risk on? Are we risk off? Here's Tom Lee, well-respected, Fundstrat. He's very bullish. He thinks that S&P 500 to reach all-time highs this month. And the reason I bring this up, of course, is that if economy's up, stocks are up, then Tesla is going to be buoyed, hopefully. Sometimes it does go against what others think, but let's listen to what he says.
We're going to rally pretty strongly in August. So I think we can get back to 65 or get to 6,600 all-time highs in the next couple of weeks.
And then
he's very bullish. What's your thinking about what might happen?
Well, I think Fundstrat made a prediction beginning of the year that then got totally derailed by the tariffs, but I think it could still become true, and that concerns me a little bit on the midterm, the next 3 months. They basically said they expect a very strong first half to reach all-time highs or exceed all-time highs, and then there will be a correction in September or something. And I think that prediction, in my opinion, makes a lot of sense. Like, we had the big hiccup with the tariffs, but now we recaptured all-time highs. We're going back there. So I think he might be right on August. The big question is what happens, in September and October, because everything, the whole setup smells to me like, oh, this is going to be a correction. And then we are going to be fine in December. But from a Tesla perspective, if we keep lagging, which I think is very possible, right? Because right now the stock is like in limbo. Like, people think, we need more proof for robotaxi. I'm pretty sure this proof is coming very soon, definitely in the next 12 months, very likely in the next 9 months, potentially even the next 6 months, but probably not in the next 3 months, even though there's a risk, an upside risk. So if that is the case, and the stock is, on a fundamental level, going sideways for 3 more months, to see more seeds being seeded, and Austin still with safety driver until November, in my opinion. So we will see the next 3 months. Okay, maybe we have more cities, there's more rollouts, but maybe they don't move the needle. And then there's a crash of some sort. I think the stock can go back down to 2, depending how bad it gets, but to 225, to the all-time, not all-time, the previous lows this year is absolutely possible if you see like a big, market correction, which could absolutely happen given the fact how high the stocks are, that they're going even higher in August, and we are going to the most problematic seasonal months in September, October. So I think there is a scenario where we see 220s again if the market crashes and Tesla is lagging. And then we would be, that would be annoying in my opinion, because it's bad for the leap holders and options, and that definitely will look horrible on paper. It would set us up for an enormously coiled situation for Tesla, enormously coiled, because I think then the stock has a chance to go up 200% over, a very short period of time. Within 6 months, I could imagine like a 200% increase from 200 to 600. But do I like the scenario? Probably not, because it's too annoying. Like, when you're sitting there and you see, everything evaporating on paper, that makes people nervous. But we should be prepared for this, because I think it's a very realistic scenario where basically all the bad things, sideways movement, not enough robotaxi to really move the needle in the next 3 months, plus a market crash or correction, that could really get us down there. But if it happens and you have capital left over, that would be a dream. because then you can leverage the hell out of it, because then it all comes together in December and for Q1, in my opinion.
Yeah, I'm going to bring Mark Newton from Fanstrat back on the show to see what he thinks. But I like your thinking, your analysis. What are you thinking about Tesla's Q3? So people are saying Q3 should be good because people are buying cars because of the last few, September 30th is when the $7,500 federal tax credit is going to go away. I am one of those people. I'm about to buy a Model Y now because I want to take advantage of that $7,500. So I can see the numbers of volume going up, but then they do expect Q4 to be a negative for Tesla and the final year to be negative. Do you think that's already built in? Or do you think that this could,
I think very good numbers will move the stock a little bit, but I mean, investors are smart enough to understand what's going on. I think there are tailwinds. Elon took over sales and marketing for US and Europe. I think Elon is a smart dude. He's going to figure something out. We already see some impacts, in my opinion, in Europe. Like, it's looking pretty good. And so I think Q3 could be very strong, like stronger than people expect, not just tailwinds with the expiring credits in the United States that will lead to a rush to Model 3s and Ys, very likely. So people want to take advantage of the expiring tax credits from the big, beautiful bill that will end by end of Q3. So that will drive demand, but there will be on top of that some more positive momentum, I think, from some Elon actions and from the wrongly perceived Europe weakness that's not really there because now the Model Y is fully ramped and selling. But Q4 will be pretty horrible, in my opinion. There's no way around it because it's pull forward demand. Maybe not as bad as people think because there are some tailwinds, but it's going to be bad. So I don't know how strong the whole thing will be for the stock. I think macro and technical will be the main thing to watch because you know how it is. Like, Tesla could just do nothing and just be there and with no fundamental news and drop 30% because it's a market correction. So I think that's really what we have to look out for.
That's why I started with that. Yeah. That's why I started with that. But I do see, and I've been reporting that the institutions, the big money, they've got this built in. They think that the auto bit part of it. Here's I'll report again. This Morgan Stanley here, basically Adam Jonas, in a new note a couple of days ago, they said this: while several U.S. companies are beginning to push the limits of physical AI, few, if any, are as well positioned as Tesla across data, robotics, energy, AI, manufacturing, and the supporting infrastructure needed to scale, from fleet operations to communication networks. We continue to view Tesla as our top pick in the U.S. auto sector. So as an auto company, they're getting the story. So even if volumes go down or volumes go up in Q3, it's almost the story's starting to be told that it's not as big of a deal anymore because, Tesla, Elon's comment that the world is changing from EVs. Yeah, that's old news. It's not about EVs anymore. It's about autonomy.
I think it's very important to understand what the situation is and what these things do and what they don't do. I think what they do is they put in a floor into the story and put investors in the mindset, okay, we are not going to look at bad auto news and then dump the stock to 10, right? Or to 90. That is what this does. It basically puts in a floor. It's like a put option. It says, you know what, even if things are looking very bad in the core business, no one is going to dump the stock like crazy because that is the thing. What it won't do is drive the stock up, right? Because people are going to say, sure, this is the greatest play ever in history in the world of embodied AI. It's just not time because they're not ready. So we believe they will be ready at some point in the future, but they're not ready now. We are willing to cut them all kinds of slack in terms of bad core business. That's what we get here from them. But we are not getting a stock upwards movement. So what will get us to the stock upwards movement? When this entire crowd that is now primed by Adam Jonas, by Dan Ives, by JP Morgan, by everyone, okay, this is a great story. Once it starts to happen, and once it starts to happen, it will be Tesla winning this thing very likely. It's just not happening right now. When will it change? Well, once we have some form of hard forcing function, I call it, or some form of evidence that it starts to happen in earnest. And that can be anything from a amazing Optimus demo where everyone's like, oh my God, this thing seems to be ready, to my 5% free cash flow or operating cash flow from Robotaxi, which I expect in May, April next year. Could be earlier, could be later, but that's what I expect. And once it becomes clear they're hitting this inflection point in May, of course it will be pulled forward, right? Then smart people at Morgan Stanley is like, why would we wait? Why would we not do it then in February or something? So this is, I think that's the situation. This is a floor. It's not driving up the stock, but it's priming everyone. And the big question is when do they get nervous and pull the trigger? What is the trigger pulling event?
Yeah. Which we're still going to need to wait. That's the hard news to listen to, because that forcing function you've been talking about, I think we are seeing that, like you said, it's not going to happen in the next 6 months. It could, but right now you're comfortable saying February, maybe March, likely.
But it's also, I mean, I tend to be, even though people think I'm uber bullish and all kinds of things, I'm actually very conservative about these things. So when I talk about this forcing function, we're literally talking about a flood
Earnings.
of cash coming in. It's a forcing function. Does not mean it's the earliest point where the run-up happens. It's the latest point. And so that's the question. With the latest point I expect now is May, well, you can be more or less guaranteed no one is going to wait for May. But it's about when do people see, okay, this is actually going to happen. And then there will be a panic situation, FOMO situation that can very rapidly within a week lead to massive changes. And that week can happen at any time once this becomes clear. And once, the macro situation has cleared up. So either we are sailing through September and October and then have a crash in November, whatever. The most likely situation is we get weakness in September and October, exactly when Tesla is still going sideways, and this will lead to a major hit. And once you're down, I think then we are getting into extremely trigger-happy territory, probably this year.
Yeah. Some people said the jump will happen when there's 3 cities, robotaxis in 3 cities. Some people like you said 2,000 cars, because the 2,000 cars will translate to at least 5% of cash flow. And some people are saying that it's, oh God, I lost my train of thought here. Or the moment that Tesla removes the drivers, the safety monitor or safety drivers, because by that point, let's say a month or 2 from now, you've got Tesla doing robotaxi in California, but with a safety driver, in Austin, but with a safety monitor. But then let's say there's 2 other states, so they got presence. And then at the moment that in Austin they go, we don't need the safety monitor anymore, that's a signal to everybody going, they really could do this. And now they're presence in 4 or 5 cities and they're this big and all that. What do you think of those 3? That could happen by the end of this year.
Well, I think everything here is momentum-based and trajectory-based. So what people need to see is, okay, the expansion is not stopping. We are constantly seeing new cities coming in. We are seeing each city being scaled, and we see the first one with no safety drivers. I think then everything comes together, and then everyone gets FOMO, and then we are in a situation, then the slightest spark can ignite that. There might still need to be a spark, but then you're basically, the powder keg is open, it's dry, and there's a match. So then it's just the question, okay, do you really want to wait until someone drops the match? So I think these are the conditions. And my 2000 are just one reflection of that, right? Basically, when you see, okay, it is undoubtedly true that we expand. So it's at least 3 cities and more lining up. The Austin area expansion is continuing. It's also going to be combined with an expansion of robotaxi numbers, which is a little unclear right now. So once we see evidence, they have actually hundreds in Austin driving around, and the safety drivers are gone, I think then you have green light on all fronts in terms of trajectory. Then everyone's like, this is just a train, right? So then we are really hot, I would say. And then that doesn't mean that at that minute where this happens, the stock goes up, but I think then you have the powder keg open with a match over it. And then you better be in the stock, in my opinion. It can still take another 3 months before this thing actually runs up, but then everything, all conditions are met, in my opinion.
Yeah, you and I did a show last Saturday where you explained that they're going to go wide and then they're going to go slow, deep, And that's what they're doing. So they're going to go wide. But right now, they have not expanded the number of vehicles, and they've not yet necessarily expanded the invites for all these cities. So while it looks like they've got Austin and they got San Francisco, and maybe they'll launch somewhere else very soon, 2 or 3 weeks, I expect, because it looks like every 2 or 3 weeks. But even if they do that, we're waiting for them to double the vehicles, and that they're going slow on in each of these cities. So
I don't
they're going to get
have a
started
good
in multiple cities.
reliable I don't have a good reliable source or something for the number of vehicles. So I just get more hearsay that people say, well, I don't think they have more vehicles because the wait times are longer, but I don't have a reliable source. I can't tell you if they're 40 on the road or 30 or 60 right now in Austin.
We think it's 11 or 12 only because there's people that are tracking the license plates. That's one way for us to know if it's 40 or 50, and we don't think so at this point. I think that's pretty reliable. Well, okay, but not as, like we don't know exact numbers, but magnitude wise, it's certainly not 100, right? So other signals that are happening with Tesla is the video Giga Texas that Joe Tegmeyer is doing. He's showing that he's basically reporting down here. There's a new production schedule that was emailed to staff for the Model Ys. Now staff is working from 6 a.m. through 6 p.m., which is 1.5 hours more work per day. And then he's got video showing that there's lots of production equipment deliveries, a huge robot lifted onto this new third floor, mezzanine on the west side of the main factory. We'll watch a bit of that video as we go, but they're slightly increasing their Model Y production output at Giga Texas. Is that most likely because of the Russian demand for these new EV as the EV credit expires? It could be simply that, but it could also be that there's these new, more affordable versions spotted. Now, agreed that it's not going to come until October. They already said that. They already said it. They're going to be wait till Q4, somewhere in October, November, December. But we're starting to see these. This is an 18-inch wheel. So it's maybe because of that, it could be the more affordable model. It's got the aero curvers for this version. The Model Y with glass roof versus a Model Y with a metal roof. You see how they've got this covered up here? That's a very good sign that that's more affordable model. It's much more affordable if they just stick with a metal roof instead of glass roof. Also differentiates, all right? It's not as wonderful. So you can see that's why did they cover this bit here. So these signs are happening. What do you think is going on here?
Well, I mean, I think the playbook should be very clear. We have an expiration of the credits that should lead to a major rush end of Q3. Everyone gets that. I think what people underestimate a little bit is the affordable model in Q4, which could be a surprise success for Tesla. When you look at the demand elasticity curve, everyone has seen that. How bigger the TAM is under 30,000, it's enormous. So going with that car into the sub $30,000 car category will lead to an enormous increase in TAM. And what people forget, because we have a lot of Tesla fans here watching my channel, your channel, and Tesla owners, and they are disappointed with the affordable Model Y. What is that? It's not exciting. This is not a new model, not a new form factor. It's so boring. The whole point of a cheap car is not that it's exciting. The point is the price point. You're hitting basically families going into the dealership. They're not like, oh, what's the most exciting? That's a piece of it. But they look at their checkbooks like, well, I can't spend it. I need to be here. So for them, the exciting point is this becomes affordable. That's why the market expands, not because you're exciting. So I think the timing is kind of perfect with a big, beautiful bill that they got lucky to be exactly able to get all the credit run, right, for the expiring credits. And then the day after Q3 can launch the affordable model with the buffer that they didn't even anticipate because they wanted to launch it in July or August. Now they have time until October. So they can prepare this very well. They can pre-produce that stuff and really try to make it a big splash. I think that's what they're going to do and say, look, I know no one wants to buy Model Ys anymore because yesterday it was $7,500 cheaper. That's bad news. Here's the good news. Here's a $10,000 cheaper car or whatever. It's like sub 30,000, and you can buy it. And if they do this right, and they got their production under control, and they had more margin effectiveness, so they are getting similar margins to Model Y, hopefully. Who knows? I mean, it could be a surprise success. I don't want to be too artificially bullish here, but it's just perfect timing. They have more preparation time. Imagine you ramp everything up for July and August, and then someone tells you, oh, you have another 6 weeks for the whole launch. That's all good news. Not to make a potentially bad Q4 look too good, but I think there's upside surprise built in if they nail the launch and if the price is really low enough to more than offset the EV credit.
You have some very, very good points there, Joe. I really appreciate that. So first of all, thank you to Joe Techmeyer for those videos of Giga Texas. He's keeping us updated. You go check out his website, his YouTube channel. You can watch the whole thing, and he does narration for many of these. So this is, I like what you said, which is they purposely decided to not launch the more affordable models until October or sometime in Q4, but that means two things, right? One is they're much more prepared for it. And so they could already be stockpiling, and that's why you're seeing all this activity. And that you answered the question I was going to ask you, which is people are saying, no, it's not a compact car. If it was a compact car, not just another Model Y that's shorter, that's not enough. It's the price. So do you really believe that that's the case, that the price matters more than the fact that it's not a compact car? The segment is different. But if the price is the same as a compact car but bigger,
This is 100% that's what people underestimate. If you are into
Yeah.
this premium segment, it's all about who cares if you pay $5,000 more. You're rich anyway. If you buy a $50,000 car, you will also buy a $55,000 car if it's much cooler, right? So this is the game there. The game in sub 30,000, you're dealing with people who do not have that disposable
afford it.
income. They say, I simply
the
can't.
monthlies, yeah, specifically the monthly
Exactly. I
payments.
can only go to whatever it is, 350, and my down payment is absolutely capped at 6,000. That's it.
Right.
I'm maxed out. And so, if they come out with 199 a month, whatever it is, I don't like 249, something like that, and a reasonable down payment.
Yeah.
And they have the Tesla brand, and it's a full Model Y. All the bad stuff for us as mega fans are actually good things. It's like, no, it's just a Model Y, same form factor. It's big. It's just more.
It's got that brand, the Model Y. Yeah, it's a better brand than
and
let's
for
say
us,
Model
it's like the worst
C.
things. Like, dude, we want to have more form factors. We want to see a new. Like, we don't count. If you buy your Model Y, like you don't count. You buy the Model Y. Why do I need you to be excited about the cheap Model Y? I need some totally different person.
New excited. Market. Yeah.
Exactly. And so I think people underestimate price absolutely matters. 199 works, 249, it's game over. And so people need to understand this kind of logic.
I love it. Good points. I mean, it's funny that some of the analysts still say that unless it's a segment, it's boring. It's price. That's bigger. So I am more excited now after talking to you, because I do think you're right that they've got 3 more months to prepare for this. Maybe they will be able to do a bigger launch than we're expecting. Maybe they're already prepared. Maybe they'll find a way. Okay. So the third thing for the rest of this year is Optimus. And we were a little disappointed at the earnings call because they said that they're not, it sounded like that they're going to go with the version 3, which they're very excited about, but that means that they're no longer, doesn't sound like they're going to try to hit the 2,000, 5,000 bots by the end of this year for the Optimus 2. But as we start hearing more about these partners that Tesla's securing, and here's the one that looks like that they partner with Samsung Electromechanics, who's going to now supply the camera modules for the bots. They're combining Sony sensors with Samsung lenses to power Optimus Vision system, key for walking and navigating. So this leaked out there that it's the partner Tesla's chosen is Samsung and Sony. There's a recent agreement between Samsung and that to build those to create the chip factory here in right next to Giga Texas. Now they've also chosen them to do the camera modules. It's going to be used in Tesla's humanoid robots. I mean, this is so early, but at least it's one signal that they are partnering and they're setting themselves up for scale That's, I think, the big news is that, they need to pick a big partner. They're already partnered with them so that they can prepare for the big scale. I don't know if that means necessarily for short term, but
I mean,
yeah.
let me put it, let me put this into an extreme example so people really understand what's going on. If you have 10 humanoid robot companies, or let's say 5, who really are in the race, you have Boston Dynamics, maybe, I don't even know what they're doing, and you have Figure 1, the most important one, then you have a bunch of Chinese, and you have Tesla. What's basically happening here, to take it to an extreme example, is 9 out of 10 outside Tesla saying, look, I have this new prototype. They can make somersaults or handstands, and Mike can now do tea for you. Look here, we have the video. And Figure 1, look, they can now talk to each other, and now they're opening the fridge door. And Tesla never says anything. And then said, we bought a lithium mine, we bought a cobalt mine, and we bought this mine because we need to manufacture the actuators. That's an extreme example because I'm going to the mining, but what they're doing here is other pieces of the supply chain. Why this makes me so excited is I don't want to hear about all these science experiments anymore. This is Tesla. They're going to figure that out. And the fact that they're not even talking about that anymore, but they're going into full-scale supply chain preparations, tells you how huge this is, that they're absolutely in execution mode, in scaling mode, and closing these deals. From chips, which is the most strategic, complicated thing, that they secured the Samsung deal in Texas for Optimus Explicitly AI6. And now the eyes and everything makes me very bullish. And that's exactly why I'm betting on Tesla and no one else. Because you need to do, if you're serious about this and you're serious about the timelines, you need to do this now. And that's for me, the big lesson and learning from Elon as an entrepreneur, that he thinks things actually through. Whereas most people, even including me, it's like if something new happens, reality engineering, we engineer a new world, a new reality. We tend to get stuck in the next incremental step. Well, we don't even see the robots. They need to do all these things. That's all focus, all firepower on making this happen and showing it works. Whereas Elon says, no. Yes, we are focusing on the firepower here, but in parallel, we are already thinking about the next step. This thing needs to be scaled. If we want to scale it in 3 years, we need to put in these things now. Because if we do it consecutively, sequentially, we are losing 2 years. We are literally 5 years instead of 3 years. So we paralyze these things because we have a true belief and a true vision in our brain when we simulate reality, what will happen in 2028 and 2029. And we are building that reality in 2029 now. And in order to do that, we need multiple parallel operating lines, projects. One is supply chain, totally independent, and the other one is prototyping. If we sequentialize this, we are screwed. It's going to take until 2032. And that is the exciting thing, that they will be able to create that new world in time, years before anyone else. Even if that someone else would be on the same level of prototype development. And so that's like, because in Pioneer Lands, we always talk about the future and reality engineering. That's one of the big hacks in reality engineering, that you're so good in simulating in your brain what that future reality will look like, that you can, in earnest, actually work towards that future on all dimensions, not just one. So I think and these are all not just indications, these are all hard proof. These are billions of dollars committed to have this paralyzed track of the supply chain, hitting it when the prototype is not a prototype anymore. Whereas everyone else only focuses on prototype.
Yeah, well articulated. So I think that very simplistically, there's two kinds of Tesla investors. There's the kinds that are impatient at this point. We've been waiting many years. The stock is flat. Everything you guys say is always just wait till the future. And then there's the others who are watching. The reason why we're invested in Tesla is not because of the car company anymore. We're looking for robotaxi and bots, and we're seeing real proof that both of them are now moving forward. And I think this partnership, as well as another one I reported on yesterday, which is magnesium, there's a a partner that chose their SK Group, which is their partner today, to build the Giga Press, partner with 4 other companies to build the magnesium that is required to create the actuators for the bots. And then, so you're seeing this movement like this. This is no longer prototype. This is actual production line stuff in scale. So yes, we do need to wait, but we're talking about scaling robots. We're talking about scaling robo-taxis, and we're watching it in front of our eyes, and people are so impatient, waiting for the stock to jump.
Yeah, you're totally right. But for me, as a theorist of reality engineering, it's beautiful to watch, because that's exactly what the human brain is not good at. It has to do with the ability to think through first principles, but all of the first principles, you need to actually create that reality. And then have the conviction and faith in your simulation, into your simulation, to actually take action along these trajectories. And no one can do, I mean, that's an Elon thing. We can learn to do it. I think they are not just Elon capable of doing this, but of the competitors, no one is doing that. They can't. They're going to tinker around. And as I said, in this one work stream of prototyping, people might be as good as Tesla. Who the hell knows? Maybe they have an equally capable robot, but they're just completely screwed if they don't parallelize all the stuff you need when you hit that point.
For scale production. And that's what we're seeing. Thank you so much, Joe. Appreciate it. Check him out at his website, pioneerlands.net. There's a community there. They talk about AGI. They talk about Tesla, of course. His YouTube channel, he does even bigger deep dives. He's got a lot of these theories that have been proven correct so far, Joe. So appreciate it. We'll keep having these weekly calls. Thank you so much, Joe. Appreciate you. Bye-bye.
Thank you.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.